What's up, everybody? Welcome back to the channel. I made a purchase today and I just want to review my trade just to be transparent. So I actually bought the S&P 500 today and I put a very large sum of money in it. And I'm going to explain why I did it. Now, this is the fund that I do and I hold them long term, but I also sometimes will swing trade them a little bit. So let me just show you what I did. And if you look at the SPY, which is the S&P 500, I could have bought the SPY, but I like to buy more shares. So I got the FXAIX, which I can only buy at the end of the day and sell at the end of the day now. But I'm planning to hold it until it retests the 9 EMA. So I can look at the SPY here and be able to watch it and time it. So when I look at the 1 year chart, which I'm at, there's a few things I'm looking for. I look at what does the trend look like? What does the RSI look like, which it's 39 right now? And when I was looking at it, you can see the RSI here is like 37. For me, I obviously could be wrong, who knows? But we have earnings for Apple, we have earnings for Google, we have earnings for all these big companies, Amazon, and I'm just banking on the fact that they're going to get a pop. And I don't think that their earnings are all going to go bad or like they're just going to do terrible. Like you saw Netflix and it just died. But looking here, I bought at the end of the day. So I got a little high. But if you look at the candle that formed, which I really liked. Because if you look at this candle here, this green bar, this volume was 119 million, which is awesome. So that's a big green volume bar. And I'm using it based off of this. So if I look at the past here, when it sold off down here, it retested the EMA. Sold off down here, it retested the EMA. Sold off down here, retested the EMA. And for those that don't understand, the EMA is these little squiggly lines you see. And the red one is the 9 EMA, which is the 9 previous candles. So what I'm banking on is that since I bought around this price, I want to see it go up at least 10 more points. And that's going to be a very good gain for me if I can get that. That would be like 10%. 10% on a big amount is huge. Now, if I can capture 5% of that, I'd be very happy. So my goal is I bought them now, so I'm going to have them now overnight. And I'm going to hold them for the week, and I'm hoping that I can get rid of this by Friday. Because I have this feeling before Powell speaks in May, the market's going to start coming up a little bit, and then it's going to start to sell off again. Now, I could be wrong, but I have my money in the S&P 500. So long term, it's really not a big deal if I'm wrong. I could just always hold on to it. I don't want to hold on to it, but I mean, the S&P 500 was 462 and now it's down to 428. I still think I'm getting a nice steal. And I'm just trying to get 5 to 10% on this and then I'll go back to my day trading. But sometimes I like to do swing trades like this when I don't know what companies to buy and I look at stocks like let's bring it up. I look at Amazon and I see that like can I swing this? But I don't want to put my money on a 2,900 share stock. It's too expensive. I can get like barely any shares. But if I buy a company like FXAIX, which is the index fund that I refer to in my videos to invest long term, which I have other accounts that I just strictly hold FXAIX, which is the S&P 500 long term. When you look at like the 5 year chart on it, I mean, I love that I can buy so many shares at 150. So I just feel like I'm getting a steal here. I can buy more shares. And anytime that you trade like ETFs or you trade S&P 500 or the NASDAQ, it's really important to look at their EMA lines because they really respect them, the 20, the 9, and the 50, or the 200. So here's the 9, here's the 20, and here's the 200. They usually respect them even when they sell off and everybody thinks the world's ending. They usually retest. And here's a great example. This is the 200 EMA at the green. It's sold off down here. It's hard to time these bottoms, but you have to use the RSI to try to at least get a more informed decision. Now, it's not a guarantee, obviously. But if you kind of look at the trend, whenever the RSI was up here in the 80s, it just sold off. And then now here, when the RSI was down to 23, it went up. So those are definitely things that I look into, that I try to, if I'm going to make this decision to buy, that's when I'm trying to make that informed decision. RSI is low enough, in my opinion, where I think we can get a retest here. It doesn't always have to be the RSI is like 23, like that's great. And I hope that doesn't happen now that I have shares. But I look at this big green volume bar here as there's an opportunity where potentially the NASDAQ and the S&P 500 are going to go up 5 to 10% in this week and then probably sell off. I think they're going to get rejected at these lines. But my goal is to buy. I just bought here, and I'm going to try to sell it up here when it's about to get to this point. So that's the goal. I made a big purchase today. I just wanted to be transparent because I bought the FXAIX, and I think it's noteworthy to show your positions if you're actually trading, because if people are following, they can at least have an idea of why you're making the trade you're making. Now, this is more a riskier trade, but I personally I trade NASDAQ and S&P 500 the most. And I don't think the market is just gonna like sell off and that's it and we're just done. Because when you look at the overall trajectory, I know it's broken this 200 EMA, but we just get retests usually at these EMA lines, and that's what I'm banking on. So I just wanted to make a video. I bought today. I made a swing trade. I'm gonna try to hopefully we get hopefully we get 2 or 3 more green days, and then I'm gonna sell out and take my profits. But this is what I'm looking at. I just want to be transparent and show you guys what I'm trading. And when I'm not sure what to trade, I just go to the indexes, because sometimes it's very difficult for me to like just hold Apple and hold a large amount of shares. God forbid Apple goes out of business or something. I'd rather just hold it in index fund that if it did go south, I can just hold long term if I'm doing these swing trades. Because here's a good example. If you were trading, let's say, FNGU, which is something that I like to trade, but it's so risky because if you look at the overall, it just died. It went from $50, it's down to $12. I mean, this is a great opportunity if you can catch the low, but you're not always going to get the low. So you have to just be very careful. So at least I feel comfortable with my position. If I get stuck bag holding for a little bit, hopefully we get a pop and then I can sell out. But that's what I'm looking for right now.